what you're looking for here is, a break of this uptrend, which is what we're kind of working on right now. If we take out this 20-day moving average, that's going to suggest that we get a bit bigger correction down to around 4,500 on the S&P. Wouldn't be surprising here, and that would just basically kind of encapsulate everything going back to where the Fed kind of announced their, kind of their pause, right? CPI and the pause from the Fed meeting, et cetera, where we had that big jump up in the market, that big kind of gap. Here's what you need to know before the bell this morning, though. The markets did correct yesterday, and we did come down and actually touch the 20-day moving average yesterday. We did bounce off of that at the end of the day. Again, money coming into the market, not surprising, but the market did end in the red yesterday. This morning, futures are pointing lower. Again, we're down about 17 points pre-market on the S&P. NASDAQ's down about 88 right now. So again, another day where we're going to see kind of more pressure in those kind of high-tech, big mega cap names. Going to kind of pressure the market this morning. But we did actually trigger that MACD sell signal yesterday from a fairly high level. And again, we talked about that negative divergence in relative strength yesterday. That's continuing to suggest that we may see some lower prices here near term as we kind of work through this this correctional process that we've been in. Now, importantly, and again, there's not a whole lot of concern here by any stretch of the imagination. We've had periods before where the market's been very elevated on kind of an overbought condition, and we had these corrections that occurred. So again, kind of what you're looking for here is, a break of this uptrend, which is what we're kind of working on right now. If we take out this 20-day moving average, that's going to suggest that we get a bit bigger correction down to around 4,500 on the S&P. Wouldn't be surprising here, and that would just basically kind of encapsulate everything going back to where the Fed kind of announced their, kind of their pause, right? CPI and the pause from the Fed meeting, et cetera, where we had that big jump up in the market, that big kind of gap. So basically just kind of return back to that 50-day moving average would not be surprising at all. Now, again, that's not bearish at all. That would actually be a much better entry point to add to exposure and portfolios, for this year. But again, we're very early, and again, wondering how big this correction could ultimately be is an unknown at this moment. But we are getting set up here potentially to work off some of this overbought condition, and we're in that process. So we'll see how long this takes. But again, just be a little bit cautious here about rushing into the markets. Let the markets kind of work themselves out here a bit, and I think you'll have a better entry point. One thing we talked about previously too is that interest rates had gotten extremely overbought, just like stocks. So during the month of November and December, stocks ran up sharply, bond yields fell, and again, bond yields got very overbought as well on that pullback. So again, we're starting to see a little bit of a correction now in bond yields, and so again, they're triggering a buy. So remember, yields and bond prices are reversed. So we're starting to see a buy signal on interest rates, suggesting interest rates are about to go up some. And so again, that wouldn't be surprising here. Interest rates got this big drop in yields, obviously got very overdone here. So again, I wouldn't be surprised to see bond yields get back above 4%. That'll give you a much better opportunity to add bond exposure to your portfolio if you need to this year. And particularly at a little bit better yield level as well. So again, this kind of correctional process in the market and correctional process in bonds at the same time, that's kind of been that correlation that we've had here for a while. So seeing this correlation continue would not be surprising. So again, just be a little bit patient here. Again, I don't know how big of a correction we're going to get. It's not going to be massive, but we could certainly see a bit of a process that takes 2-3 weeks to kind of work off some of these previous overbought conditions on both interest rates as well as stock prices, and give you a better entry opportunity to put capital to work. So just kind of hold some cash right now, be a little bit patient, but that's what you need to know before the bell this morning.